Hello, good morning. How are we doing?
Hi.
Time to sell in the month of May and go away, or the sellers have already sold in the month of April and this time they will come back in the month of May?
I have no idea, Nikunj, what's happening on a month-on-month basis, but I think right now, of course, there are a bit of headwinds, and that's the reason we have seen some of the sort of correction on sideways market, but it's not a lot of correction. So I don't think there's a lot of selling. In fact, people are buying, the SIP flow which we are seeing. So long-term money, I believe, is coming in.
Because why Nifty is stuck in a range from last 6 months? A lot has been thrown at us. War, crude, inflation, interest rates, energy shock, margin compression, bijli ki shortage, everything that could possibly go wrong on paper has actually happened in last 6 months. But Nifty still is in and around 17,000. Now is that good news that we are resisting the fall? That is bad news that we've not fallen, and now we need to align with the reality.
So I think, Nikunj, it's a very, very interesting question, and I'm sure everybody is grappling with this. So what has happened is I think there's a big sector rotation which has happened. And if you look at, whatever uncertainty has been happening around the globe, there are some of the sectors which are unimpacted with that, and thereby the earnings of those sectors is remaining intact. Let's say, for argument's sake, banking. I don't think any of this is happening around the world. Earnings gets impacted significantly. IT, I think earning is kind of fairly robust. If you see commodities and oil and gas, I think earning is continuing to be robust as long as the prices of the commodity and the crude remains high, and which is right now elevated. So that is protected, right? So I think only very small, which is a small part of the Nifty, which is a consumer, and let's say automobiles and some of the sectors which are impacted. That's I think less than 20% weightage in the industry. So if you see, or maybe 25% weightage in the industry in the Nifty. So to that extent, I think the earnings of those heavy sectors kind of are still intact, and outlook is reasonably all right. And hence, you have not seen significant sort of correction at the Nifty level. Sectoral, wherever there are worries, I think we have seen stocks correcting at 30%, 40% in mid-cap space. Wherever there's an impact, stocks have corrected 30-40%. So I think we have seen this kind of sector rotation happening. And even on those, sort of sectors and stocks which have corrected, we are seeing beginning to see some flows coming at a lower level, because eventually one belief, at least we have, and I guess a lot of participants who are putting money in markets have, is that the medium term to long term trend is sort of intact. A lot of drivers of the structural growth drivers are still in place, and India is in a sweet spot. So hence money is sort of coming in even at the lower level in the sector which are right now otherwise suffering from the short term pains of the business.
So, Vikas, that's quite interesting considering there are pockets within mid caps, which now most experts are saying that, the stars are not in the vanilla names, but in the small and mid cap universe. Where within mid caps would you hunt? And where is it that you still find opportunities to scout for newer names?
So again, I think there are you have to constantly keep looking for. There's no easy answer to that, and we have time and again seen that in the same space. At least if you ask me, where the trends are long, when you are seeing corrections like today, you can see in last 2-3 months, interesting opportunities have come about, and today also there are, especially let's say in API space, chemical space, where the stocks have corrected. But has the trend changed from long-term perspective? Answer is no, and that are the time. These are the times where you will find interesting ideas. Stocks have corrected, even some of the stocks have corrected even 40-50%. Now, these are the brilliant opportunities. So as long as you understand and have faith in the overall sort of business trend. So we have seen in chemical space, stocks have corrected, practically in most of the, space where stocks last year did very well, we have seen corrected. In textiles, we are seeing good amount of correction happening, whereas the trend continues to remain reasonably all right. So I think, in consumption, by the way, in consumer related stocks, for argument's sake, Hindustan Lever is down almost 35% from the 30-35% from the peak now because of the short-term headwinds. But will that come back over a period of time? As the inflationary worries decides, it will. It's only a matter of 6 months, 12 months, because India is going to consume and companies are going to grow. So like this, you can find value in every space, but you have to take slightly sort of longer term, medium term call overlooking next 1 or 2 quarters. And that is what is, I think, very, very essential when you are right now looking at value or investing opportunity in the market.
Right. Because when you see global instances, how Netflix has crashed, what has happened to Meta, how Amazon crashed last night, are markets saying that it's time to get out of growth stocks? Is this rotation here to stay? What it means for India, what it means for Indian growth stocks?
So absolutely, Nikunj. I think wherever, if you ask me, investors invested, markets invested based on the hypothesis of an accelerated growth, over and which is sustainable accelerated growth, and market assign higher valuations. You know, as and when that disappointment happens, you are bound to see such kind of reaction because pretty much everybody was on same side of the trade. Everybody and what happens in the late end of that cycle, typically a lot of people act out of FOMO who missed the opportunity earlier and they think that is going to sustain forever. And as and when that change happens, you see, this kind of correction or reaction does happen. And we are seeing, by the way, why we have to go to US. Even in India, we saw last year same thing happened to the new tech place. I think there are pockets even in today in India, even in some of the very specialty chemical plays, we are seeing building where companies are getting priced at 15 times sales. I mean, I understand companies are great, everything is fine, but if I pay today the price after factoring in 35% growth for next 5 years, then there's nothing for me as an investor. But still, markets are pricing in buying stocks based out of FOMO. So according to me, whenever this kind of you put rationality aside and act, I think these kind of reactions do happen. So eventually, I think dust will settle down. So one has to be always sort of careful. And today there are the shift definitely is happening, as you rightly said, that towards sectors and stocks where the risk reward of investing is into place. The growth is ahead. Like we spoke last time, I think suddenly paper stocks have given interesting number. Many companies are coming, as sectors are kind of delivering, but the risk reward. I mean, companies are available at 15% free cash flow yield. Companies are available at 10% free cash flow yield. Should I buy that or versus a company where 40% growth is pegged in and fully priced in, and so risk reward obviously lies here. So this shift is, especially in a capital scarce environment, as the interest rates go, as the cost goes up, is bound to happen. And that is what we are seeing. So as the cost of capital goes up, you will see this kind of shift is bound to happen, and I think it's here to stay for some time.
Good morning. The last time we had you on the show, Vikas, you told us that you added two stocks to your portfolio, which was JK Paper and PCBL. What else have you added since then?
I mean, we haven't really added much, but we are, evaluating. I think automobile space looks pretty interesting. I think again the growth has not come as disappointed, and still nothing is on horizon in terms of immediate visibility from the data point of view. But we have to always kind of make hypotheses. There's a lot of latent demand. Chip shortage is likely to get over in the next 1-2 quarters. So I think somewhere in my opinion, 2-3 months, 4 months time, there will be a period where I think automobile stocks can start falling into place. I think banking sectors will again continue to do well, and there are interesting ideas there where interesting sort of companies are available at a reasonable valuation. So again, you have to keep hunting and looking where market is sort of not market is overlooking, market is overly worried about it, but businesses are solid. The growth is going to come by. It might be with the lag, but that's where the risk reward actually is, where the basically it's not a crowded trade, and that's where I think one should keep looking for and hunting for.
Metals, do you think that has peaked out? Just the kind of news that we're getting from China, the way the prices have also started to come down. Is that a peaked out trade?
Possible. See, I mean, while I think, I don't have a view, but I think this reward is definitely not in the favor of buying here and remaining invested. Somewhere it will have to pull. It's very simple. If you just common sensically understand, today, most of the companies who are looking to expand, do capex, are beginning to postpone their capex plans by 6 months, 9 months, because the capital cost of doing that has gone up by 40-50% higher. Now, if let's say most companies are saying, look, I don't want to do now, I want to postpone, eventually it will have to reflect into the demand, right? Because everybody thinks same way. And if a project made sense at 100 rupees, it may not be making as much sense at 150 rupees, right? And that's what the nature. So that's how we always see that steep inflation tends to postpone demand. And I think we will probably start seeing that kind of things playing out, and that will of course have some impact on the demand for the metals in times to come. So I do feel that risk reward of remaining invested into metals for at least in next 6 to 12 months seems to be playing out. So one should sort of stay, at least one should avoid. I feel.
Okay, that's all the time we have for today, Vikas. But thank you so much for joining us live and taking us through your ideas as well as your strategies for this market.